From finance to healthcare and even criminal justice, algorithm-based decision-making is reshaping industries. But while these algorithms offer efficiency and objectivity, they raise ethical challenges that must be addressed to ensure equity, transparency, and accountability. Today, we're diving into the world of algorithms, innovation, and the critical balance between progress and protection. Number 1. Ethical issues in algorithm-based decision-making. Let's start with the ethical concerns surrounding algorithms. The first is bias. Algorithms are trained on data, and if that data contains historical biases, the algorithm will inherit and potentially amplify those biases. A hiring algorithm, for example, trained on biased datasets could unintentionally discriminate, reducing workplace diversity. Transparency is another major challenge. Many algorithms operate as black boxes. Their decision-making processes are complex and hidden. For users and even developers, this lack of clarity is problematic, especially when algorithms influence crucial areas like loans or healthcare. Then there's accountability. If an algorithm denies a loan unfairly or makes a faulty decision, who's responsible? The developer? The company? Accountability is often murky, leaving consumers with little recourse. Privacy concerns also loom large. Algorithms often require vast amounts of personal data, raising the risk of misuse or breaches. Worse, many people aren't even aware their data is being used in decision-making systems. To address these challenges, companies must rigorously test algorithms for fairness, prioritize transparency, and clearly define accountability frameworks. Robust data security measures and obtaining informed consent are also non-negotiable. Algorithms hold great promise, but only when deployed ethically. Number 2. Balancing innovation with consumer protection. Now let's talk about innovation. While it drives growth and improves quality of life, it can also introduce risks, especially when consumer protection takes a back seat. Consider Internet of Things devices. They bring convenience, but poorly secured devices can become entry points for cyber attacks. Data privacy is another concern. Companies often collect and monetize consumer data without clear consent. This has led to tighter regulations, like GDPR in Europe and CCPA in California. But compliance isn't just about avoiding fines. It's about building trust. Transparency is key. Companies must clearly explain how their products work, what data they collect, and how it's used. Consumers should feel informed, not misled. Proactive engagement with regulators and industry groups can also shape balanced policies that support both innovation and consumer protection. And of course, companies should actively seek consumer feedback and continuously improve their offerings. Balancing innovation and protection is not just good ethics, it's good business. Number 3. Transparency and accountability in fintech. Next, let's focus on fintech. Transparency and accountability are critical in this sector, where trust is paramount. With complex products and sensitive data at stake, companies must clearly explain fees, risks, and terms. No one wants to be caught off guard by hidden charges or vague policies. Transparency also extends to data practices. Fintech companies handle sensitive information, like bank account details. Accountability is just as important. When something goes wrong, be it a technical glitch or a misstep in data handling, responsible companies own their mistakes, resolve issues quickly, and prevent recurrence. Strong customer support systems and transparent complaint handling reinforce this trust. Regulatory compliance is non-negotiable. Adhering to laws like anti-money laundering regulations not only avoids legal issues but also signals to customers that the company operates responsibly. Number 4. Data ownership and privacy concerns. Finally, let's tackle data ownership and privacy. In the digital age, data is power, but who owns it? Many companies treat user data as their property, using it for marketing or even selling it to third parties. This approach is increasingly being questioned. Privacy concerns are at an all-time high. Massive amounts of personal data are collected every day, often without adequate safeguards. High-profile breaches and scandals have only fueled public mistrust. Users should clearly understand what data is collected and how it's used. Unfortunately, most terms of service agreements are long and complicated, leaving users unaware of what they're agreeing to. Regulations like GDPR have set high standards for data protection, granting users rights to access, amend, and even delete their data. But enforcement is complex, especially when data crosses borders. Ultimately, the future of data privacy lies in striking a balance. leveraging data for innovation while protecting individual rights. This requires robust laws, cutting-edge security, and a cultural shift towards seeing data privacy as a fundamental human right. Number 5, the digital divide and financial inclusion. What is the digital divide? The digital divide refers to the gap between individuals and communities with access to modern technology and those without it. This divide affects every aspect of life, especially financial inclusion. Access to affordable and practical financial services like payments, credit, savings, and insurance. How the digital divide impacts financial inclusion. Technology can make financial services more accessible, particularly in areas where traditional banking infrastructure is limited. However, the lack of access to devices or internet connectivity leaves millions without a lifeline to modern financial tools. Success stories from mobile technology. Take, for instance, East Africa's mobile money revolution. Services like M-Pesa have transformed financial access, enabling people to send and receive money via basic mobile phones. This innovation doesn't require a smartphone or high-speed internet, making it a lifeline for rural and low-income populations. Security and trust issues. And then there's the matter of trust. With financial services moving online, cybersecurity risks have increased. For users to adopt digital tools, they need to feel confident that their personal and financial information is secure. A smartphone isn't enough if users don't know how to navigate financial apps safely and effectively. Solutions to bridge the gap. To address these challenges, governments and private companies must work together. Investments in infrastructure, like broader internet coverage and reliable electricity, are critical. Digital literacy programs can teach people to use technology effectively. Number 6, sustainable practices in fintech. For fintech companies, sustainability is about achieving long-term profitability while minimizing negative impacts on the environment and society. Traditional banking relies heavily on physical infrastructure, branch offices, ATMs, and cash transport, all of which have a significant carbon footprint. Fintech, with its digital-first approach, is inherently more sustainable, reducing the need for these resource-intensive operations. By enabling online transactions, fintech companies can lower the environmental impact of financial services. Promoting financial inclusion. Financial inclusion is another vital aspect of sustainability. Fintech innovations like mobile banking and microfinance apps have empowered underserved populations, providing them with tools to save, borrow, and invest. These innovations can uplift entire communities, driving sustainable economic growth. Many companies offer tools that let users monitor their carbon footprints, offset emissions, or invest in green projects. These initiatives are reshaping financial behavior, making sustainability a part of everyday banking. Corporate social responsibility, CSR. CSR initiatives further reflect fintech's commitment to sustainability. From supporting local education and healthcare projects to contributing to poverty alleviation, these efforts enhance social equity and reinforce trust in the communities they serve. The road ahead. The digital divide persists, and the complexity of global data protection laws challenges even the most forward-thinking companies. For sustainability, balancing profitability with ethical and environmental goals requires continuous effort. It's not just about technology or business, it's about shaping the future. Governments, companies, and communities must work together to ensure that financial inclusion and sustainability are not just goals, but achievements. Fintech is more than just technology. It's a force for good. Let's build a future where no one is left behind.